Good afternoon, everyone. Pleasure to be with you today. My name is Scott Huxley, COO of Syscom. I'm delighted today to speak with everyone really about a topic and bring in someone that will be able to guide us all moving forward in terms of a topic that is top of mind for quite a few businesses, misunderstood by a few. So, we're going to move quickly. Topic, as you well know, is what should I spend on IT? What should that look like? We're going to move quickly on this one. It's going to be 30 minutes. So I'm going to get through some housekeeping rules here. A little bit about myself, then we'll go ahead and introduce Jonathan Satterfield here shortly. Let me go ahead and move on here. Yeah, if you have questions, feel free. It is being recorded, so feel free to raise a hand or drop something in the chat box if you have questions. We always welcome feedback. As you know, for those that have joined us, we've invested a lot of time and effort in trying to deliver as much information and education as we can around business and technology. We are running another webinar next Thursday on cyber liability insurance for your business, addressing some gaps you have there. And again, they're always on Thursdays, running from 2 to 2:30 Eastern. A little bit about myself for those that haven't met me or we haven't spoken before. Again, to repeat an earlier comment, my name is Scott Huxley, Chief Operations Officer here at Syscom. And again, delighted to be with you today and deliver a value on a topic that is misunderstood by many businesses. With no further ado, I want to go ahead and introduce Jonathan Satterfield of Driven Business Solutions. He's an outsourced CFO. Jonathan, hopefully you can hear me.
Absolutely. Thank you, everyone, for attending, and thank you, Scott, for having me.
Yeah, you're welcome. Again, as I mentioned earlier, we're going to move quickly on this one. It's really Q&A. So again, feel free to drop questions in there. I guess let's start with the obvious question, Jonathan. My experience has been so many businesses don't have an IT budget. They often define that budget on what they invest or spend with a vendor. Has that been your experience? And if so, maybe you can help some of the people today understand why that might be.
Yeah, Scott, actually, that has been my experience, that a well thought out and planned IT budget is virtually non-existent in most small businesses. And as a CPA, an outsourced CFO, and a financial professional, what I found is that the lion's share of small businesses, in fact, don't maintain a rolling budget realistically in any tangible form or fashion. A lot of it is driven off of, if there's money in the bank, then I'm making money, and kind of a responsive break fix perspective on technology and some other things that are looked at as expenses instead of investments.
Yeah. So again, a lot of times people don't have a budget. When we're constantly asked for guidance on that, where people start, and one of the guidance that we give people is, consider a percentage of revenue, and if when you're defining out a budget, what that number should look like, and if you, I guess let's start from the very top, Jonathan. If you don't have a budget, you should have one, right? Even if you're whatever you are, if you have zero budget, you should probably have some semblance, and then maybe work backward. I don't know.
Absolutely. Even if it's, for example, if you're a small sole proprietor, let's say plumber, you would at least want to say, I anticipate to make this much money in the next 12 months. I anticipate it's going to cost me this much in materials and this much on automobile and this much on insurance, and at least get the major 5 or 6 big buckets, so that at the most simplistic level, you can do some basic analysis on whether your expectations were met, and whether you're meeting your own goals.
Yeah, because we know as business owners and business leaders, we know, for example, that the budgets that we have for, one of the big ticket items, which of course is payroll. But it is odd when you think about it that technology, and we'll come to this here in the middle of the webinar, but but technology uh, should be seen as an investment, and like many other items in our business, it's odd to think that we kind of go by the seat of our pants, for want of a better word, right?
Absolutely. It's funny that you say that, Scott, because I was actually watching CNBC earlier, and the former president and chief executive officer of SAP, one of the world's largest enterprise scale software developers and manufacturers, started a company called ServiceNow, and they're selling multi-million dollar contracts, and they anticipate that the 100% payoff period is within 6 months, and that within 1 year, they are virtually guaranteeing a 5x on your investment.
Okay.
And it's
Yeah.
all in cloud driven, integrated, mobilely interfaced, bringing it all together from a deployable technology standpoint. And I think that really just kind of hits home the point that technology is an investment that delivers a return, not just a band-aid to fix a problem.
Yeah, I think historically, many years ago, technology really was just a case of I need internet and I need access to a web browser. I check my email. But maybe if businesses see it as an investment, and as a tool in which to drive more profit into the business, then maybe that raises the importance, and maybe we are establishing that budget, right? That if we make it important, it becomes an important budget line item.
Absolutely, Scott. And I would also add, I've heard several times in the last couple of years, and if you look at the curves, it's true. The technology is currently changing at the slowest pace that we can realistically expect to see it change for the rest of our lives. So kind of getting up to relevance and getting up to what is available in today's business and technology environment is really kind of foundational to being able to survive and be relevant in the future.
Okay. So in short, and we'll move on, if you don't have a budget, establish one. Maybe speak to, obviously professionals similar to yourself, in to try and get some sort of baseline information. We touched on some of it earlier. If you don't have a budget today, get one. And then in terms of defining out, starting from ground zero, so to speak, with no budget, typically, as you draft out your budget, you're looking at somewhere between 2 to 4% of revenue as a start. And now those numbers may be a little higher in certain cases, depending on what type of industry, but then make a start. So knowing that and moving on, let's switch gears real quickly to now we have a budget, probably for the first time ever. And we're looking for return on that investment, right? So now we're taking it as a serious business line item where we have this amount of dollars that we're going to invest as business leaders. We want that money to work for us, right? We want that money to yield a return.
Absolutely. That's the fundamental difference between an expense and an investment. Expenses, generally speaking, are kind of one-off items that don't generally create a return. Investments are by definition expected to return on top of that initial outlay.
Okay. I think I mentioned this quote to you before, and I love it. It's one from Warren Buffett, where he says, price is what you pay, value is what you get. When it comes to how we think about technology and treating it as an investment, right? Because a lot of times technology, or if you want to like the IT, gets broken down in just to a raw cost. I spent this amount of money with a vendor, and next year I'm going to spend X. But we should probably be thinking of it more of an investment, right? And then what that investment might look like.
Absolutely. I can speak from personal experience, having worked in an environment. Pardon the noise in the background. I have a Great Dane who's barking at someone at the front door, if you can't hear that. So I worked in an environment where there were a lot of decisions, and I've seen where there are a lot of decisions made because it's looked at cost is the initial and most important deciding factor. And when you're the person who has to write the checks, often emotionally it is that oh man, this really hurts.
Mm-hmm.
I would challenge people in that position to take a step back and say, how much is my time worth? How much is the time of my staff worth? Because if I have to pay my staff to fix stuff or figure stuff out in the technology environment, when that's not really what they do on a daily basis, how much time does that actually take them? How much lost revenue is that over the course of a year? And then how do those numbers compare to what you would have paid someone like yourself, Scott, in Syscom for a fully managed, proactive, and very responsive system? I personally can remember being on the phone with Microsoft support for 4 out of 12 hours in a tax season day working in a small tax practice. And that's a substantial amount of lost revenue because there wasn't a managed infrastructure or a well planned out and invested infrastructure. So it really drives long-term success and long-term efficiency and long-term profitability when it's 3 steps back are taken and it's said, all right, am I just slapping a band-aid on a problem, or am I shooting from the hip to just really quickly address this? Or am I really looking at this and saying, is this the best long-term solution given the resources I have and the current facts and circumstances?
Right. So do you feel the issue maybe with small businesses is IT is just treated as a cost, like the dynamic that it's an investment? And I think you touched on a really good point that hopefully people on the call and people that are listening to the recording move forward. I want to touch on something that you kind of started with, which is soft costs. It's something that's so hard to gain, so hard to kind of gather. Soft cost. How much lost productivity, lost profit dollars disappear but by not having that technology and by not having a budget, not seeing it as an investment and then investing accordingly? There's a lot of soft costs, right, that are lost and not captured by businesses, and that's where you you're losing profit potentially and lost opportunity by that soft cost that often many business owners don't know what it is, right? Like if you have an issue and you know I know you personally, you're pretty tech savvy. It would be way more efficient for you to guide a business on their financial strategy than it would be to wrestle with an issue with a computer, even though you're probably capable of doing so. That soft dollars is often lost, right?
Absolutely, Scott. In my experience working in an industry that is fundamentally technology driven and based now, 12-column ledger paper is the dinosaur of my industry. It's extinct for all intents and purposes. I've had my system go down on me and literally lost an entire work day, and retrospectively someone like yourself probably could have got me back up and running within an hour. And so it doesn't take too many of those days in a year to fundamentally self-fund an investment in really well thought out, well planned, and well engineered technology prior to working with someone like yourself. And actually, you specifically, I on average would lose about 75 to 100 hours a year trying to fix something or get something to work when something stopped working, or manage my technology environment, not necessarily as an information technology professional, but a tech savvy and very resourceful individual. And when I math that out into that lost revenue at the hourly rates that my time was billed at, you can spend a lot of money on a technology provider and still
Right.
make more money than you otherwise would.
Yeah.
As
Good point.
as the person who would be sitting over me, or myself as the business owner, I mean, I would easily recoup 100% on top of whatever I spent.
Right.
And
Yeah.
to me, as a financial professional, you get a 1 year 100% ROI is outstanding.
Yeah. That's a good comment, and without any kind of pre-lead, it kind of leads me into my next point, that if we have a budget and we have a budget and we know what we're allocating it, the next thing is, hopefully now we're seeing it as an investment. We want that investment to have a return, and in order to do that, we need a strategy around that, right? Like, it's not just so many years in our industry, our guidance has been based on this box, or this computer's old, or this server's old, or this thing's old, have a new one. It needs to be kind of collaborative. It needs, even for small businesses, you need to have a plan, right? You need to have a strategy, and you need to look at it to have a return for you, right?
Absolutely. Similar to kind of building a business budget and making information technology a specific line item and giving it the thought and planning to really leverage it as an investment. Once the decision has been made to really step into that line item and really utilize those financial resources to their highest level, if that's a commitment of a substantial amount of capital, it would reasonably follow that the amount of thought and time put into deploying those resources and capital and how it was actually going to drive the desired outcomes, is almost like building, it's fundamentally building, I don't want to call it a budget, but they're so similar. It's a non-financial budget and roadmap for that environment over the next year, 18 months, or 2 years. And when it's constantly rolling forward, that really drives a value proposition in the business, because the risk of becoming technologically antiquated, inefficient, and irrelevant decreases to almost zero, which
Okay.
is really the name of the game nowadays in almost every industry and every business.
A real quick topical question with things like COVID-19 and where we sit today in this month, is probably, even more important right now, that businesses have a plan for the future moving forward. We hope we don't find ourselves in this situation again, but again, a budget would allow us, right, to understand what investments we should make, and what they should look like, and maybe where we can get some efficiencies.
Absolutely. I would actually kind of like to throw a comment in on top of that. It was something I do believe in, that my quote might be a little off on specifically the numbers, but I think everyone will get the gist of what it's really saying about the fabric of business and the global economy. Microsoft had their earnings call and released quarterly earnings yesterday, and it was for the quarter ending in December, but they were talking about what was going on in the business and in their industry over the last 60 days. And they say that basically in the last 60 days, there has been the equivalent of about a decade's worth of technological deployment and enablement just because of the coronavirus.
Yeah.
That scale of change is permanent.
Yeah, powerful numbers. I know the words are said of the new norm, right? But definitely, you're a small business and you're trying to make your way through this. You're trying to keep employees and you're trying to scale and trying to grow. Technology is often one of the key ways in which you can do that, right?
Absolutely. I think there's going to be a transition for people, particularly in professional services, that's going to be more of remotely enabled and technology driven. I think there you're going to see big productivity gains and efficiency gains because people can now work at the times and in the circumstances that are best for their personalities and lives. FaceTime in a lot of industries is not necessarily required in order to meet the production expectations and the revenue expectations. High-speed internet is readily available. Generally speaking, most of the hardware that's required can be acquired at a very inconsequential cost in the grand scheme of things. And it's really a lot of businesses. Just think about if you had an office with 5 or 10 people in December and you now had to enable them all to work remotely, and they've been doing that for the last 45 days. And what if your revenue didn't drop?
Mm-hmm. Yep,
Well,
good
then
point.
that would mean you don't actually need that office.
Yep,
You could save all that money and it would instantaneously turn into profit.
yep. That's a good observation. I want to use the last 8 or so minutes we have here, Jonathan, to talk about the last component of this here. So again, to reiterate everyone on the call and people listen to the recording in the future, have a budget, that'll give you a baseline, work with a professional to build a strategy so you know what that looks like. Think on what a business goal outcome, what the business outcome is that you're looking for. And the last kind of 8 minutes, I want to talk about what those outcomes could look like. And I want to share with you some of the ones I've seen, Jonathan, and maybe you can give us some feedback as well, which is the returns. So where people do have a budget and do have a plan, what I've seen is just broadly. So in manufacturing, less paper on the shop floor, right? More electronic communication through iPads and things like that on the shop floor, less paper. I've seen KPIs, data now for businesses, machines interconnected, reporting back numbers that they never had before. That's key. That's your return on investment. That's really what that technology investment should look like, right? Those are the types of returns that a business owner should be looking for.
Absolutely, Scott. Any kind of real-time transparency and information that can be gathered inside an organization really can be used to make better decisions. And anytime you can make a better decision, it would be a logical assumption that you would get a better outcome. I've seen, I mean, I'll just speak from my own personal experience, having worked in multiple technology environments that are used to fundamentally drive the same final deliverable or output that I've seen from the very low end to the medium end to the high end, particularly on tax software. And some of the medium stuff is really, really good if you as an operator are extremely efficient and extremely knowledgeable. It's probably not a bad idea.
Yep.
However, if you're really looking to scale and grow, there are the time savings that are achieved at the end are astronomical. For example, I've prepared a tax return and done it off of paper in a system where by hand going through papers, it took me 5 hours.
Okay.
I've effectively done the exact same tax return in a subsequent year and put it in a technology environment that was really modernized and integrated. And my data entry time beginning to end was an hour. So when
Okay.
you're talking at a billable rate of whatever it is, what if I'm not billing on rates and I'm billing on deliverable? Just because I get better at my job doesn't mean I should make less money. So
Mm-hmm.
let's assume that 5-hour tax return was a $600 tax return, which is a modest hourly rate for an accountant. Well, if I can get that same $600 in an hour, how many of those does it take for me to self-fund a substantial technology investment? Where it's hard is maybe that technology investment on the front side is $10,000 or $15,000.
Okay.
That's a big number. Over the course of a year, if that 10 or 15,000 frees up $70,000 worth of your time, I would suggest you go borrow $15,000 from someone.
Right. One of the questions that I received was in terms of investment, what you spend, and the question was this: was if you invest less, do you get less? In other words, if you invest less, do you save money? Is it safe to say the answer is invariably no? Like, do you know what I mean? Like, that was a question that I'd received.
I have two very cliche statements that I personally are part of my personal value system. The first one is good, fast, cheap, pick two.
Okay. Yep.
You're only going to get two of them to be true at any given point in time.
Okay.
Good and fast generally lead to better outcomes than fast and cheap, because fast and cheap doesn't tend to be very good. And why would you want to spend money on a not good? That to me sounds like it just not the best business decision. The other is, if you get what you pay for and you are willing to pay for what you get, and they're both true at the same time, you do not ever lose.
Okay. Yeah, that's a good and compelling observation. As we come close to wrap it up, just to summarize for everyone, again, build out that budget. We use that 2 to 4% of revenue as a baseline to make a start. Think of the business goals. Work with a professional in the industry that can help guide you on how technology can help you reach your business goal. And consider it more of an investment, right, Jonathan? If you're not already thinking about it as an investment, think about it maybe that way now as a key moving forward, if you want to use that as a tool in your business to grow your business or to bring more money to the bottom line.
Absolutely. Technology is it's kind of the fabric of business nowadays. I doubt there is a single business owner out here who is not utilizing some form of modern technology to run their business. So really driving better decisions in that space is probably one of the easiest, most cost efficient ways to gain productivity and efficiency, and at the end of the day, drive more revenue and more profit in your business.
Okay, excellent. Yeah. Well, it's been great to go through those things with you. Again, to everyone that's on the call here today, I appreciate the questions that I received. For those that are listening to it later, obviously it'll be available, as I mentioned earlier, in recording format. Jonathan, as always, really insightful. I want to thank you for joining us today. So it's always good to get your insight on something that business owners really need to take seriously and start to have a plan for.
Absolutely. Thank you for having me, Scott. My pleasure.
Yep. Yep. You're welcome. All right. Thank you very much. Have a good day, everyone.